So, welcome back, everyone. My guest today is a Scottsdale, Arizona based co founder with nearly 30 years in the mortgage industry. He's a nationally recognized mortgage expert, a hard money lending specialist, and the man behind Local Lattes, a content series that tells you everything you need to know about how he thinks about this business. He co founded Local Mortgage in 2023 with a straightforward but powerful belief you shouldn't have to choose between good rates and great service. Mr. Roy Mechel, welcome to the show.
Hey, thanks for having me.
Now, Roy, if you could give us a little backfill on your history, your journey that brought you
Sure.
here, and a little bit about your company, and then we'll dig into some real deep questions.
Yeah. So unfortunately, I've been in the mortgage business more than 30 years. Don't love admitting that, but I've been in it a pretty long time. So my kind of, like most people, I didn't get into the mortgage business like on purpose. Most of the people I meet in the mortgage business somehow fell into it and then you don't leave. And that was my thing. I really wanted to work on Wall Street, had a little out of college, a little Wall Street job, and then loved Arizona. I went to college here and came back, and that's how I got in the mortgage business and have been doing it here for more than 30 years. Local's actually the second company that I owned. I owned another company with two partners called State Mortgage, and then Locals with one of those partners that we did recently. We had built up State to a pretty big company and then sold it and kind of stayed in the mortgage business and then decided that it was time to open up another company. So we opened up Local Mortgage, which is a pretty boutique mortgage banker, mortgage broker. So we broker all what I would call the traditional things like conventional loans, jumbo loans, FHA loans, VA loans, all those kind of things, some non-QM product. And then we banker with our own money, fix and flips, construction, and land loans. So that's kind
Mhm.
of the quick history on me.
Perfect. Sounds like the type of brain we want to pick on today's
Yeah.
topics. So my first question would be, why start something new after 30 years of being successful in the methods and the traditional way that you were working? What brought you to the desire to start over per se with
Yeah.
local mortgage?
So I wish this was a better answer, but it's not. I'm a shitty employee. So the problem is I work for other people and in my career, to pat myself on the back, that whole deal, 7 times in my career, I was in the top 100 loan officers in the country. I've been featured in the Wall Street Journal, all this stuff. So I'm not good at being managed by people I don't think are better than me. I need my manager to bring something to the table. So after I had sold my company, I managed a couple of companies and then I got out of management for a little bit and I just wasn't a good employee. I'm really not. I would go home and complain to my wife that, the person managing me who wasn't like the sharpest knife in the drawer or doesn't really understand the business. And the problem a lot of big mortgage companies have is they promote people from big, like from the Wells Fargos, the Chases of the world, and if they're running like a realtor, like we do a lot of realtor business, that's always been my concentration is you get past customers, you get all that, but the bulk of our business comes from realtor referrals. And if you're doing that and your manager has never been in the trenches, you just don't have respect for that because there's the Disney script that they tell you, and then there's the real world. So the truth is that it was out of frustration of not being a good employee that at least if I fail, I could just blame myself, right? At least if I could say, well, this sucks. And like, who's to blame? I'm like, oh yeah, I'm at the top of that pyramid. I guess it's me. So I want to have a
So what
more romantic, cooler answer, but I don't.
No, so what you're saying, there are a bunch of sales managers out there that are happy that you're no longer around. Is what
There are, and when they see me, they mention that to me, yeah. They're like, "Hey, you're a nice guy, but you weren't great as an employee."
Yeah, right, right. So what made you decide that the world needed a different kind of mortgage company?
So, I think, there's a lot of mortgage companies that what I would call are good at cradle to grave, getting your loan from cradle to grave. There's a whole bunch of them. But typically, they are labor intensive and staff intensive, so their rate is and their fees are just higher. And so my demographic, which I've been fortunate, is people who, like, when they're on the phone with me, they're not really worried if they can qualify for a loan. It's more what loan's best for them and what the rates are and the fees. And I think that all these mortgage companies that are really good at cradle to grave but have higher rates tell their employees, their loan officers, and again, one of the reasons I open local is that you have to tell people your expertise. You have to tell people how good the service is, which is good, which is really good and really important. But at the end of the day, and other mortgage people hate when I say this, mortgages are a commodity, right? Up until the day of closing, they're not. Like you may need my expertise how to structure something because you have a house to sell and you're borrowing your down payment from your investments and all this stuff, and you'll need, my expertise in that. But the day after you close, you have a 30-year fix at 6%. So you have an apple, and Whole Foods sells an apple, and Trader Joe's sells an apple, and Safeway sells an apple. They're apples, right? So I think that a lot of mortgage companies overvalue that service and that expertise when you still need it. You just need it at a better price. And so, our model has always been, and my philosophy has always been, and I don't know where you're at if Discount Tire is a big tire shop where you are, but they're based in Arizona, so they're everywhere
Mhm.
in Arizona.
Mhm.
And Discount Tire has good service. Like, an amazing thing, I did a video on a Discount Tire guy because he remembered my phone number before I gave it because my whole family goes there, and I'm like, "That's incredible that you could remember that, right?" To pull up my profile. So I set appointments, the service is good, they're super friendly. They don't have a super cool lounge like a high-end dealership, like, I don't have a free latte or a cappuccino or, like, really nice couches and a big TV, but, like, one time I asked my dealer when I needed new tires, I'm like, "How much more are these tires than Discount Tire, the same tire?" And he goes, "We're gonna be 180 more tire than the exact same tire," right? Like, it's the I forget what I have on my cars, but say Goodyear's. It's the same exact model of Goodyear tire that, is shipped to both of them. And he's like, "But we'll give you a free loaner car, and we'll give you, like, you could have as much soda and coffee as you want." And I'm like, "Well, I need 4 tires. Do you know how much coffee I could buy saving $180 a tire? Like, it's a lot
Uh-huh.
of coffee, dude. Like, I don't know if
It
you've been
is a
out
lot
to
of coffee.
I don't know if you've been to a Starbucks or anything, but I don't know what you think the prices are. I mean, inflation and all, that's gotten a lot higher. And, like, an Uber or, like, whatever to get back home is $12, 24 round trip. Like, I made it up on tire one and I need 4 of them. So I always base the mortgage thing on, I want to be the Discount Tire of mortgages. I want to give you the same product. I want to give you good service. And maybe I don't give you a cappuccino made by a barista. But if I could save you, like I just saved, we're closing on someone next week that compared to the other mortgage quote they got, we're saving them 441 a month. So
Wow.
that buys a lot of coffee, right? So if
Does
I
buy
don't
a
have
lot
the
of coffee.
coolest lounge for them and I don't have like this thing and that thing, but I give them great advice, like I've done $1 billion in loans, so my advice to them was pretty good. And they're a retired couple and actually needed some advice how to structure it. But
Mhm.
at the end of the day, they're going to save 441 a month. And not a lot of people do their loan applications in person because of technology. But these two people were in their 70s, so they wanted to meet in person. They brought their grandkids, and what I kept telling them is, with that 441 a month, you can spoil those grandkids pretty good, you know? Like, that's
Yeah,
you know
absolutely.
yeah, that's a nice dinner for your kids and your grandkids, twice a month. So, even with the where prices have gone, so that's kind of my philosophy, our locals philosophy is like, let's be the Discount Tire mortgage.
Yeah, and that kind of plays into the next question. Your motto, live local, love local. And you've been pretty explicit that local isn't just a name, it's an ethos. It's part of the brand that you built. How does local translate into terms of the day-to-day client experience? And what does a borrower get from local mortgage that they wouldn't get from a national lender?
Yeah, so a couple of things, there's a couple of things on the technical end. National lenders, our neighborhoods are very different here. Like, you could go 1 mile and the neighborhood changes It's a totally different neighborhood, so your values are totally different, things like that, and living here, we know that, right? So if you have an appraisal come in low, I'm like, "Oh, like, the appraiser didn't realize that you crossed the street and things go up 20%." Uh, that's part of it. The other part of it, I'm a big connector of people, so the thing is, if you're moving to Phoenix, right, you may need like, I just had a borrower ask me for a cardiologist, and I've done a loan for a cardiologist over and over and over again, who's a great guy. That's a good referral source where the person out of national lenders like Google cardiologists, right?
Right.
They want a landscaper, they wanna know where to eat. One of the things we send the borrowers, get a little video plug here for someone else, but one of the things we send as a closing gift is a Phoenix cookbook that has all these cool restaurants give a recipe. So it gives you like, the cool restaurants. The other thing is, like, you want to do business with people in your community. Like tomorrow, St. Mary's Food Bank, which is the oldest food bank in the country. Me and a couple of people are volunteering and, packing boxes and feeding the homeless. You want to do business with someone in your community because
Mhm.
you're going to be living in that community. So, you know, the person at the national company, you're not going to see at your kid's school, you're not going to see at the grocery store. Do they really care about the community? Where, we actually care about the community. And there's times when you're like, "Well, I need," all of a sudden I need a real estate attorney or a CPA. Ask the national person for that. They have no idea, right? They're gonna
Mhm.
Google it,
Mhm.
where we could say, "Here, this person's done great work for our clients," you know? And also some people want a another opinion besides their realtors on neighborhoods and schools, right?
Right.
They wanna know, like, "I'm thinking of moving to this part of Arizona. What do you think?" And some of the place, all our neighbors have, like, neighborhoods have distinct things, like, some of them are, young families, like, you may not love that because most of your neighbors probably have kids 3 to 10 years old, and it's gonna be loud, right? And you're
Mhm.
70,
Mhm.
like,
Yeah.
here's a different neighborhood, so a lot of times it's even just opinions that they want besides their realtor opinion, they want another opinion
Yeah.
on the
Yeah.
community.
Absolutely. Yep. So have you seen, because it seems to me, this is just personal observation, that we've gone from your mortgage, brick and mortar mortgage stores, for lack of a better term, agencies, to it went more to online, and now do you see it coming back to local?
So I think most people rather use technology to get their loan and close their loan. So we do a lot of virtual closings. But as far as getting us documents and doing the application, a lot of, most people just want to use technology at, after work, they want to go online and do their application. And as far as getting us documents, putting it into a secure portal, but people want to speak to you. And I think
Yep.
people like the local factor that, "Hey, you're in Scottsdale, I'm buying in Scottsdale, it'd be great." And a lot of people through the transaction, because you get to know someone somewhat intimately when you're doing their mortgage, because you have a lot of information on them. A lot of those people wanna grab a coffee or something after they close. Like, "Hey, that was great. I'd love to, sit down with you for 15 minutes and have a coffee one day, blah, blah, blah." But they don't want to do their application so much in person. But like I said, we just got two retired
Yeah.
people who, wanted to meet and wanted to do in person. So every once in a while we get someone who says, you know, I want to know who I'm doing business with. So
Yep. Yep. So I was reading some of your recent LinkedIn content, and you've been very direct about what you've called made up fees, the processing fees, underwriting fees, administration fees, totaling thousands of dollars for pure profit that most borrowers never question. Um, what made you decide to be that candid and forthcoming? Did you see it as a way to really differentiate yourself from the national lenders?
yeah, because I think there's a lot of lenders that trick people with the rate. I was just having this discussion at a mortgage networking event last night. So there's a couple of lenders that, you're out shopping for your mortgage and you come to me and, right now rates are in the high fives. So I tell you,
Mm.
Rick, I can get you 5 3/4 on a 30-year fix. And then you tell me, well, this guy, like, I like you, Roy, but this guy could get me 5 1/4 on a 30-year fix. And I'm like, "Yeah, that's super aggressive. That's great, Rick. Like, do you mind sending me his estimate?" And then in the estimate, there's all these fees, and that's how they're getting to 5 and a quarter. And I'm like, "Rick, if you really wanna get to 5 and a quarter, here's what I would charge you to get to 5 and a quarter, which is $2,700 lower than they're charging you. But, like, do you wanna pay extra to get to 5 and a quarter? And if rates are trending down, which they have been,
Right.
you may not wanna pay extra money to get that lower rate because if you end up refinancing in 10 months, 18 months, 20 months, whatever it is, you're never getting that money back. So I think, that's one of my things with the whole discount tire model and my passion about the business is like there's people out there tricking borrowers because they tell them to focus on the rate, focus on the rate, focus on the rate. And then you find out that they're paying 2 points to get the rate. And you're like, and I do a lot of stuff on points that I think paying discount points is fine if the seller's paying it, but really, if you're paying it, you're using your own money to lower your payment. It's kinda artificial. So,
Yeah.
I think there's a lot of lenders that trick people with some of their fees or points to show a lower rate, and it entices people, and it's the flashy, shiny object. Really, one of the things I say, it's like Disneyland is great at putting averting your attention when you're waiting online for the ride. Like, that's what they're
Mhm.
doing. Like, they're like, "Just look at the rate, don't worry
Yeah.
about the fees."
Yeah, and I think that's very refreshing to have somebody that's pointing out that, this looks good, but it's short-term thinking. Look at this. This is more of a long-term approach that'll be better for you in the end. And but it's the short-term thinking that gets people to go with
Yeah,
something
I
that's
mean,
not in their best interest.
and then, what happens a lot of times is they're too deep in it where someone else tells them that, "Oh my god, you're paying 2 points." But, they're 7, 8 days away from closing when they're like, "Well, I can't switch now, like, I need to close," and it's too late and they won't use that person again. But that person's a transactional person where, that's part of our,
Right.
built how we built local. We're not transactional. We want to keep doing loans for you, keep doing loans for your friends, your families, all that. So we want to do I should get paid by Discount Tire. We want to do the Discount Tire model
Yeah,
where,
right.
the truth is if anything goes wrong with my tires, if I need a tire, I don't really think where to go. I just go to Discount Tire and every time I've gone there, I've been super satisfied, right? So until they blow that, right, they got me, right? And
Right.
I know I'm getting a better deal than the dealership, and I know I'm giving out a comfy couch and a latte and a color TV to get the
Mhm.
better deal, and I'm willing to do that.
So, most brokers stay in their lane, talking about conventional FHA, VA loans. You've built specific expertise in private money, hard money, and non-QM lending. For a real estate investor or business owner listening right now who doesn't fit neatly into one of those categories, what do those options actually look like at local mortgage? And what's possible that they might think is impossible?
So, the biggest thing we see is fix and flip loans, where
Yeah.
you see a house, maybe it's in a great neighborhood, but maybe it's dated, right? And the original owners haven't changed a thing since they moved in 20 years ago, and now they're selling it. And the house really needs updating. But you could get a good deal on that house because of that factor. It's gonna take some money to update it, and then after you update it, there's a good profit there. The problem is the traditional lending doesn't really allow for that, so it's not so easy to do, and the other things on a lot of these deals, you have to work quickly, and so a private money loan, we could close in 3 to 5 days, right? Because we're not asking you for your income documentation, we're not asking for taxes, W-2s, any of that stuff. We're doing a soft pull credit report, and we're really valuing whether we should do the loan on your experience and the asset. And so it's a great avenue for people who I see this house, I know I can make some money doing it, fixing it up. I need to close, it's Thursday. I got to close by Tuesday to get the deal. That's who we are. And for that, you're putting more down than you would on a traditional loan typically, and you're paying a higher rate than you would traditionally
Mhm.
on a loan, but a lot of those clients, one, cannot go the traditional route because they won't qualify, and two, if speed and time's of the essence, it's a business purpose loan, so the same disclosure process that takes 8 to 10 days on a regular loan, mandatory, doesn't happen on those loans. So it's a great avenue, and, people use it for besides fix and flips, they use it for construction and to build a spec house or to build buy a
Yeah.
piece of land.
Yeah. No, I think there's a huge opening for that. I
Yeah,
We might have to work something out after we're done here.
yeah,
You mentioned in your prep call that you put a lot of stuff on social and local lattes, your casual caffeinated conversations series.
yeah.
It's something you've done consistently. That's a content strategy that most mortgage professionals don't have the patience or the instinct to build. How intentional was that? And what has it actually done for your business as far as your business growth, your return on investment?
So, again, I like to have the great romantic cool answer, but I don't have an honest answer. So I did a mortgage for a person who does for companies, he does their story, their brand. And, I don't know if you ever heard of Shinola out of Detroit. So Shinola was a bunch of ex-Ford employees who got fired, bought an ex-Ford warehouse and started making bicycles, then watches, and then got into leather goods. And I have a Shinola wallet, I have a Shinola backpack, and I'm a cyclist by hobby, so I was always turned on by the whole but their story was cool, right? Their story was, here's a bunch of ex-Ford guys who got fired, bought an ex-warehouse and rehabbed it to do all this cool stuff in Detroit when Detroit was really struggling. Super cool
Mhm.
story, and that story got me to buy the wallet and buy the backpack, and it's quality stuff, so I bought other stuff since then because, there was you know, it's besides a cool story, you want your wallet to actually hold together, and they build quality stuff. So I'm doing a mortgage for a guy who I'm like, we're discussing, and he's one of the guys who like we should meet in person because our offices are really close. So we do, and he starts telling me what he does. I'm like, yeah, give me an example. He goes, I'm the brand guy like Shanola, and I'm like, I love them. And he's like, really? I go, yeah. When I pay for lunch today, I'm taking it at my credit card from a Shanola wallet. And he's like, oh man, that's great. So he's the guy who said after doing his mortgage, he's like, let's have a coffee. And he's like, I don't understand why you're not doing videos. And I'm like, well, I'm an overweight guy from New York and I sound like an overweight guy and look like an overweight guy from New York. So there's that. And he goes, it's very authentic though. Like if you try to be some
Mhm.
cool swab guy, that's not you, right? Because I'm like, I told him there's other mortgage people that I follow that like they're just cool. He goes, yeah, that's and there's an English guy in New York that this guy Ben, who I think is great. Never met him ever, but I just think his content's great. And I show it to this guy and I'm like this guy's amazing. He goes, right. He's English. He dresses cool. He looks cool. He goes, you can't do that. Right. Very not authentic, but he's like,
Right.
you're good at
Right.
conversation. He goes, why don't you do conversations? So I started doing videos. And he didn't make a single penny off me. He referred me to a guy to film my videos. And then we started having all these conversations. He goes, you're good at having conversations. You know, a lot of people, why not have a conversation on video? So that's how
Mhm.
Local Latte started. And, it would get 100 views. And I was like, holy shit, who wants to listen to me? 100
Mhm.
people. And then some of them have gotten like 16,000 views. So I'm like, that's insane. But we started doing it with realtors, then we expanded to local business people. And so we just keep doing them. And in the end, I'm good at having conversations with people. Like I enjoy it, like finding out, especially my borrowers, like, all right, tell me your story. Like, what do you do?
Mhm.
That it's become enjoyable to me. And then the ROI on investment is there's not a direct ROI, but in the real estate community here, it's got the brand noticed a lot because at big
Mhm.
meetings, people will come up to me and go, I love your local lattes. I love the local lattes. A couple of realtors are like, can I be on local lattes? Can you get me on? All that stuff. So that's been great. And then there's been a couple of times in supermarkets and shopping centers and stuff that someone will come up to me and go, hey, you're the local latte guy, right? And I'm like, yeah. They're like, yeah, I love it. So it's been cool. The coolest story is in downtown Scottsdale, we have a coffee shop called C4. And It's they do all these cars and coffee things. It's a C4, some kind of Porsche thing with the gear shift. I don't know exactly what it is,
Oh.
which is sad because I drive a Porsche and I don't know what it is. But anyway, I'd done a couple of local lattes there, one with a stylist from Nordstrom, and I forget what the other one was. And I'm a cyclist by hobby, so I had gone out to Carlsbad to just ride my bike and clear my head for a weekend that, we all have those things where work's just crushing you and you need some me time to like clear your head. And I'm riding down PCH and there's a C4 and I'm like, it can't be the same C4. So I go in and I'm like, is this the same C4 as Scottsdale? And they're like, and I see all these influencers are making money and getting free stuff. And like, that's never like when we do local lattes, we pay for coffee, we pay for everything, right? And so I'm in C4 and I'm like, is this the same one that's in Scottsdale? Like, yeah, we only have two locations in the country. One's in Scottsdale, one's here. And then the manager's like, are you a local latte guy? And I'm like, yeah, like I'm live in Scottsdale. That's my whole thing. Like I go to the C4 there. They're like, yeah, like your local lattes is cool. What are you having? And I'm like, so
Yeah.
the direct return on investment I could get, I could tell you I got a $6 latte for free once out of all the ones we did. But the brand recognition has been strong, which has been good.
Well, and I think that's probably a platform that where you're able to show the passion that you have for what you're doing. So
Right.
I think that's very important. It adds to your authenticity when you can
Yeah.
display passion like that, and people believe it then.
Yeah. And it's been cool to do and fun to do. And I've gotten to know some people a lot better. So it's been
Yeah,
cool.
yeah, absolutely. So let's talk about the market right now. The environment that you're operating, interest rates have kept a lot of buyers on the sidelines here over the last number of months. Inventory is still tight in a lot of markets. I don't know about your market there, but I know here in Wisconsin, the
No, so
inventory
there's
struggle.
inventory here.
Yeah, it's been a struggle for quite a while now.
Yeah.
And the big consolidation news, I don't know about this. You can tell me how recent this is, but Rocket buying Mr. Cooper.
Yeah.
So how is that? How are those factors influencing the market right now?
So I think, the first part about the market and, the Arizona market in general or Metro Phoenix, where we do most of our business, is a buyer's market. Sellers are doing
Mhm,
concessions. You know, it was super frustrating way back when rates were in the twos and stuff that you put your house on the market on Friday. By Sunday, you had 31 offers, and people
mhm,
would have to waive the appraisal, waive the inspection.
mhm.
You're asking, 800,000 for your house, and the realtors are telling people they're asking 800, so let's offer 900. And, it's kind of like, to me was always like you wouldn't go into Nordstrom's and see a shirt for 100 and go up to the register, "I'll give you 150 right now." And, the person at the register like, "Will any of that be cash? Because okay, like,
Right,
we'll take
right.
150, or, the person saying, you could just have it for 100 because that's what we charge." So I think
Yeah.
those times were super frustrating for buyers. But now it's a buyer's market. So if you need a concession to help pay closing costs or there's price negotiation, so I think all that stuff is good for buyers. And, most sellers are also buyers, right? Like most of the people selling are
Will
going to
be.
be buying. So it's always a give and a take because they're like, well, I'm asking 800 and my realtor's telling me to take 775. But on the flip side, they're going to turn around and do the same thing to the next house. They're not going to give it. So, and it depends when you bought your house. But if you bought your house,
Yeah.
a while ago, you're still gonna, in Phoenix, Metro Phoenix, you might have doubled or more. So I think it's still good. The sellers are still making lots of money. I hear them complaining about how much taxes they're gonna have to pay, and I'm like, there's a way to avoid that. Lower the price of your house. If you lowered it to what you paid, you won't have any tax implications whatsoever. But I think the consolidation, the Mr. Cooper thing was more on the servicing side, and then there was a couple other servicers that consolidated. And really what they're gonna do is they're gonna go after those people as rates go down to refinance them. So it hurts, the local mortgage person because the servicer is gonna reach out to you. But again, you're gonna get a servicer, you're gonna get a national person who's at a phone, a phone center, a data center that,
Right.
you know, might not have the experience and the expertise you need whatsoever. So,
Yeah.
I think in a lot of real estate companies are consolidating, and the
Yeah.
trend we've seen here in Arizona is there's some big ones consolidating, but there's a lot of small boutique brokerages opening up because I think a lot of realtors don't want to be at a company with 30,000 agents. They want to be at a company with 30 agents. So, it's just whatever fits that realtor's personality. But we're seeing a lot of, consolidation on the big agency parts. But we are seeing a couple of, it seems like every other month a small boutique is opening.
Sure. Sure. Well, and that's a neat way to give people it's nice to have that variety. It's kinda like a saying I brew beer and I love the craft brewery industry. And as I say, it's a great time to be an alcoholic because we
Right.
have so many different and new choices now
Yeah.
on the smaller scale.
Yeah.
Not drinking from the big trough, drinking from the little trough, and that's you get a lot more flavor that way.
Yeah. No, for sure.
Yeah. So you can use that in your comparisons.
All right. I will.
Local Mortgage describes itself explicitly as an education-based mortgage company. You built workshops, content, and a whole approach around financial literacy in a transaction-heavy industry where the incentive is always to close a deal and move on. What does it actually cost you to lead with education, and what does it give back to you?
So yeah, we're big on educating. We educate realtors. We hold these masterminds all the time that educate them on like today I had a conversation with, the top appraiser in Arizona to do a class because the appraisal requirements are changing nationally coming up. So we invest a lot into keeping realtors well educated. Well educated realtors a good client for us because it makes our deals easier too. And then
Mhm.
educating consumers too on what they could do because a lot of consumers don't know what they can do. So, for instance, we talked about those people in their 70s. Um, when I looked at their loan to get them a lower rate, one of the things people don't realize if they have a large retirement account to qualify for a mortgage that they might not qualify for otherwise, they can set up distributions from their retirement account to help them qualify. So, it's things like that, educating them on that. And literally, they asked me, they're like, well, why didn't the other lender tell us this? I'm like, well, they might not know it. Like, that's the problem. Like, they just
True.
don't know. So they're giving you a higher rate loan because they said you're a bigger risk and you're not a bigger risk. We could set up, and here's and then we educate them that we'll set this up. But if there's tax implications to taking that money,
Yep.
right? The day after you close, none of that's any of our business. So if you stop that distribution or change it, it's none of our business as long as you pay your mortgage, which,
Yeah, right.
these people have perfect credit, always paid their bills, and the reason that their debt ratios are high is they're gonna sell a house, but they're waiting to move into their new house to sell the old house. So, their debt ratio will go back down when that house sells, all that
Mhm.
kind of stuff. So it's, I think educating the consumer helps us a lot. I think it also creates a lot of loyalty because they didn't know that. They were going to take a rate that was gonna cost them an extra $441, and now I'm the guy who saved them $441 and educated them how I did it. I didn't say it was magic or, like, that's what you get for using me because I pulled some strings. It was, "Here's how we're gonna do it. Here's the game plan. Here's what you need to do. You need to call your investment person, and this is what I need from them." But, if those people run into another couple, right?
Yeah.
And that other couple's like, "We're buying a new house," those people are gonna be like, "Hey, I had this guy Roy, like, totally, like, saved us money, had this cool way of doing something. You should call him." And so it comes back to us tenfold all the time.
Sure. Absolutely. All without doing any voodoo magic. It's
Yeah,
just,
yeah,
it's educating,
yeah,
and you're not gonna get that from that national lender because it's really
right,
not in their best interest to point things out like that, is it?
right, yeah.
So, last question for us today, and I wanna make this a little bit forward looking. So, your company, Local Mortgage, is 2 years old? 3 what, how
3 years old, yeah.
3 years old now?
Yeah.
So you've got your over your 30 years of experience behind you, and 1,000,000,000 plus in closed loans. What does the next chapter look like for this company? What's the signal you'll be watching in the market or in your own business that tells you you're exactly on track?
So I think, the future of local and the future of our market is it's becoming more of a buyer's market. It's a lot of the people who have rates in the 2s and the 3s are gonna have to do something because life changes, right? You wanna downsize, you wanna upsize, you get divorced, someone dies, unfortunately. So I think those people are gonna start having to get new loans. I think from a technology standpoint, and this is kind of bad for me sometimes, is technology is gonna do so much of our work. And one of the things it does well, like currently, is it'll figure out people's income for a mortgage guy. So, my wheelhouse used to be I could rip through, a 10-inch tax return and figure out how much money you make as a
Yeah.
lender, because we look at it differently than, the IRS. And now I can put that same tax return into a thing, and 2 minutes later, I have that this is how much Rick makes per Fannie Mae, per Freddie Mac, FHA, VA, Chase,
Mhm.
Wells, whoever I'm sending it to. This is so I think that's gonna be the future of the mortgage business. I think people are always going to want the expertise. And I think the local thing's always going to be important. I have an 18-year-old son, and I would love to see him get into the mortgage business because I think when, at 18, they don't even think of it as technology. It's just is, right? Where we think of it as technology, like that's cool technology. They're like, yeah, dad, it tells you how to make a reservation at a restaurant. That's not that groundbreaking, right? It's open table. You click that button, you click the number of people. We have reservations for dinner tonight. But like, when you and I were growing up, that didn't happen, right? Like you had
No,
to
no.
call a
Yeah.
restaurant and be like, party of 4, 7 o'clock. Okay, what else do you got? Right.
Yeah.
So
Yeah.
I think that the mortgage business is still gonna want that personal touch, like, a lot of people are still gonna wanna speak to people and, it's a nervous thing buying a house and getting a mortgage, and you're really exposing yourself, right? Because lenders ask a lot of questions, so we
Mhm.
really get under your komodo. Like, we ask about deposits and income and, a collection you're fighting with a vendor that like, "He never painted my door, so I didn't pay him," right? We get into all that. So I think people are going to still want the personal thing. But I think technology, like for people like my son, if he gets into it, and I, speak to my son when I get out of the business and he's in it and be like, yeah, how are you figuring income these days? And he's like, Dad, I click a button, dude. Like,
Yeah, no, it's probably gonna look something completely foreign to us by the
right.
time we're all done with this, but
Yeah.
it's the progression of things, and you're not gonna stop it. If you don't embrace it, you're gonna get left behind in it.
Yeah, for sure.
All right, sir. Well, thanks, Roy.
Yeah,
That was
my
outstanding. Is there
pleasure.
anything you wanna add here as we
No, I
go
think
into our
that covered
close?
it all.
All right, perfect. Well, again, I appreciate your openness, and you've given us some very not just theoretical talk, but you've showed us actual examples of how you're operating and what it is that you've become so passionate about and how you've applied that to this industry. So, with that being said, we appreciate your time, Roy, and we wish you the best of luck in the future.
All right. Thank you very much.
You bet. Thank you.